Good evening, everybody. This is Johnny Seville, and this is your executive summary for stock setups for the 15th of June. And this is a very, very interesting market. Have a look at the S&P 500 and what it's done over the last few days. We've basically broken down through open range. Now, open range was set here on Wednesday, June 1st. We can see the low, and we've broken below that. So we have broken open range to the downside after the upward bias occurred at the beginning of the month. Now, that doesn't mean that things will continue to drop, because open range dictates that the S&P should close within this range or above it by options expiration for June, which means we've still got a couple of days here where this could still rally back and consolidate within that range. So that's the first thing that's quite interesting about what we're looking at. Now, in terms of determining the pattern on the S&P 500, take a look at this. Originally, we thought that basically we saw this head and shoulders developing over here on the left, which it was. It looked perfect, but what we may actually have is this could actually just be the left shoulder of what may be a larger head and shoulders. So kind of one pattern within another pattern. And that's one thing that we're noticing here. Of course, if we connect the lows through and the tops, that's kind of what we're indicating here in this chart. Now, the other potential is if we were to look at some kind of alteration of that, if we were to look at more of a kind of an upward trend, right? Something a little bit more like that, where we've got a lower base of support connecting on a different type of an angle, then we could also have an upward channel. But either way, both of those patterns are bearish. So that's the one key thing to look at in terms of the S&P's movement. And if we measure that, that's then starting to look at a drop down towards that 1950 area, which incidentally, of course, is where we've had some major support before, and also where we broke through and rallied hard from back in February. Okay, so that's one thing to note. Now, the next thing to have a look at is the insider activity, which has been very predominant. So let's have a look firstly at the last 30 days. You can see that the red is insider selling versus insider buying across the sectors. And you can see a very predominant focus on the selling, obviously, rather than the buying. So, and that is in basic materials, healthcare, services, and technology, as well as financials, of course, consumer goods, all those dominating the big selling. If we have a look at the 90-day trend, you can see that's even more predominant across the last 3 months. Massive amounts of selling amidst what most have considered a very, very strong rally, but the insiders aren't buying. So those are a couple of things to look at. Now, taking it over to another way to track smart money, let's look at the corporate high yield bonds. Let's look at HYG. Now, HYG, if we just take these lines off for a second, has been moving in an upward channel, which of course is bearish. Now, that normally breaks down, but what we had last week is we saw this kind of this breakthrough and again a pullback. But, so we could say, well, that's possibly a head and shoulders. However, if it were a head and shoulders creating in this pattern, then it should have bounced, kind of in this trend line here. But it didn't. And that makes me wonder what else we could be seeing. So then I started to look at the different ways we could kind of anticipate the pattern. And by drawing across the tops of these resistance levels back here, we can also get a nice consistent line of resistance, and then support and support again. And then if we duplicate that line and make a parallel version of it above, we then get what could be actually a change in the formation, because we see the pattern was broken here. So we look at possibly where that began, and we can also bring that all the way back to here. We can see that maybe the head and shoulder started to form back here on May 24th, left shoulder, head, and breaking the channel, and then we're back at support right now. So what that would indicate to us is that the S&P 500 wants to pull back to open range, which would be an upward move. The HYG is at support, wants to rally up to this resistance level here around 83.57, 83.75. If that is indeed a head and shoulders. So what that would tell us is that we've got a potential kind of short-term burst and then open range resets on Friday with options expiration, and maybe that's the top of the right shoulder, maybe that's the top of the market. Now, how much lift we'll get, not sure. We might not get any, but those are a couple of things to look at. In terms of looking at, again, further weakness in the market, let's go back to a couple of other things. Let's look at XLF, the financial sector. And you can see that we are having a straight shot down in terms of the Twigs money flow, just about to break through zero potentially. And again, the pattern just kind of falling apart, but also just coming to support also right here, kind of this general area, right? So those are some of the factors that may be supporting the market in terms of a little bit of a bump back up. Now let's have a look. Also, we can look at the US dollar. We'll just look at it versus the Canadian dollar. And where are we here? Okay, so there we go. So if you look at the US dollar versus the Canadian, you can also see that the US dollar has been quite strong. It came out of a downward channel. So we had a fallen angel here. So we had a bump and run fallen angel where we had a downward handle. Then the ski jump back up, hit resistance. So that's the bump, pull back, and the run. Now what we're getting is another kind of fallen angel here, right? So we can move that line up, duplicate it. There we go. So there's the handle, there's the scoop. So we're looking to run up to about that 130 level, pull back, and then run again. So maybe a 133 target in terms of the US dollar versus the Canadian. So quite interesting to see that, of course, the dollar is moving strongly as well as people look for safety in the market and trusting the greenback. Now, in terms of looking at some potential trades here, there are quite a few new ones that I found tonight above and beyond what we've already researched in Trading Room. So I want to share those with you. Firstly, GRA. Now this is WR Grace & Company in the basic materials sector, and you can see here on the daily chart this kind of sideways consolidation, but very negative money flow. Now this one has some significant insider selling. We can go to, there we go. Let's go to GRA, and you can see big selling here in May, basic material sector, and you can see all this widespread selling here just happening at the top of the screen. Let's go back to the chart. Now, this could be a nice breakdown if we get below this area. So I'd be looking for a break of 73.73, and let's have a look at the weekly chart. You can see, actually, if we go to a monthly chart, it's even better. You can see that's a potential bearish flag. So if we measure the flag here and then duplicate it beneath, you can see that from the December 8 lows to the highs, that gives us a retracement on the 61.8% Fibonacci retracement down here to $42. So we could have a break of from 73.73 down to a target of 42. And that would be the stock trade. But in terms of options, we could also look at the 72.50 September puts, which are currently 195. So those are the two different ways I'd look at trading that, and I'd look at a stop loss just above $81. Okay, next we have PCAR. Now this one's a little bit early. I want to see how this, of course you can see the head and shoulders here. Again, divergent money flow, not yet breaking down below the support. So we've got again, that could tie into a possible rally in the US markets over the next couple of days. But if we see a confident break below this 200-day moving average, that would be my signal in. And in terms of looking at where that could go from there, we could, again, the head and shoulders could extend all the way down here to 46.50. So that's a fairly decent breakdown. And then I would start looking at kind of like the August 52.50 puts. They're currently $2, but again, we'll wait to see what happens with this chart. But that would be my kind of trigger that I'm looking for. Okay, next we have R. Now, these are in the rental services. We do have a downward channel here, so that's something that I want to be aware of and make sure that we get that good confirmation before we get an entry in. So again, I would wait for this to break down first. But again, you can see that very divergent money flow. They've had significant insider selling. We can go back to that one. So, well, first, here's the previous one, by the way, PCAR, insider selling. And here's R. Big chunk right there. So again, in the rental and leasing services, and lots of insider selling based on really no history of any selling at all. So that looks quite interesting. Again, we'll go back to the longer term chart. So you can see that it's kind of rallied up right into this resistance area, hitting on the 50% Fibonacci, breaking back down, money flow diverging straight out of the stock, and so that could be a nice push down as well. So I'd be looking at the 62.50 November puts, which are $3.70, and I'd be looking at a target of 57.63. But again, for confirmation, I want to see it break, below that $62 area for an entry criteria. And last but not least, CNX. Now, this one on CNX looks quite interesting also. Let me just show you the kind of the research I was doing here. We've got several trend lines. One here, connecting this low, and these lows. Right? We've also got this one, different gradient, this low, and this low. And then we've got the Fibonacci's as well, which is coming in, as you can see across the screen. Now, this has got divergent money flow and kind of the right setup to look for a possible double top. So if I hide my lines, you can see that we've got a double top here with lower tops. Now it's an Adam and Eve double top. So again, we want to kind of see that breakdown occur. But if we get a break of support, which is right beneath it, I would be looking at the speculatively, I'd look at the $12 July puts, which is 62 cents. Now, something worth noting about those is that, let's just go into that. Okay, so if we go and have a quick look at the CNX puts, tick tock. Wow, that is so funny. Yahoo Finance does not seem to be coming up, which is quite interesting because I was looking at Yahoo earlier on with a lot of smart money coming out of it amidst their buyout discussions. Let's have a quick look here. Okay, yeah, very interesting. Yahoo not working at all. Go to Google. Okay, it looks like the Yahoo is still not working, so I have brought up my options account within Interactive Brokers. So anyway, this is what I wanted to point out was the July $12 puts at 62 cents traded 5.43 thousand contracts today, which is huge. So that's very unusual volume. So looking at the chart again, tied into that, you can see that that looks fairly exciting. If we go into inside a cow and go to CNX, you can also see that there's been some very big selling. So who is it from? Greenlight Masters. All right. So lots and lots of selling from Greenlight Masters, and we can see that this is very heavy all throughout here. But then we go back and look at, okay, well, there's big buying back in July of 2015. Who was that from? Greenlight Masters. So they loaded up on all this stock at 1740 and 1674 and are now getting out at a loss, basically, of about 20%, roughly, later on. So they're willing to take that cut as the stock is in rally. So what that says to me is that they don't believe this rally is going to continue, which is another potential signal for a downward drop. So looking at a target there, this could get all the way down to $9 in my opinion, which would be obviously a 40% drop in the stock price, roughly. So again, looking at the $12 July puts, they're currently 62 cents. I'd also look at the October puts, $11 puts at $1.25. So that is your executive summary for tonight. And once again, if you are not a fully fledged member of the executive summary service yet, simply give us a go for $9 at acornwealthcorp.com/gold for a full month of these alerts every night. So we look forward to seeing you all in the next summary, and have a very happy trading. Last thing I'll say, is just do be conscious of the potential rally tomorrow. It may give you better entry zones, so watch that in the morning. Otherwise, these will look like the best ones that we're going to be hunting for as the days unfold. All right, that's it for me now. Take care.